Everybody, welcome to FoxBusiness.com Live. I'm Jenna Lee along with Connell McShane. And over the next hour, we have a big hour ahead. We're going to look into where to put your money right now, what to do with it. Hopefully, we'll have a few answers for you.
We have great guests. We really do. We're talking investing with, among others, Bob Dahl of BlackRock, Bill Fleckenstein Capital. We started off from Hong Kong today. Marc Faber joins us, the editor of the Gloom, Boom, and Doom Report. Marc, it is a terrific honor to have you on the program. Thanks for joining us. And I guess, there's so many things we could talk about, but
it's my pleasure.
The simplest way, I guess, to start is to say, where are we now? Is it boom, gloom, or doom?
Well, here it's midnight, so that's one thing that is clear. And basically what has happened, the global economy fell off a cliff between last September and March of this year, and then the fiscal stimulus packages everywhere and money printing or so-called quantitative easing kicked in and stabilized the global economy. But I mean, there hasn't been really a recovery yet. We're just not falling anymore, and I think the big problem going forward will be how to reduce the fiscal deficits and how the Fed and other central banks will essentially reverse their policies. Because if you look at the last 10 years, after 2001, the Fed slashed interest rates, and then they never increased interest rates sufficiently to slow down credit growth. So my view is that the Fed will continue to monetize.
So as we're asking the question and having your assessment there, where to put our money now, we always ask ourselves, especially on Fox Business, how do you find the fair price of something in the marketplace? So how do you know the value of anything? Given your kind of diagnosis of things, how do you know the value of assets in this market?
Yeah, that's a very good question, because once interest rates are at zero, it's very difficult to value assets. Now, I believe that they will continue to print money around the world, not just in the US, and that the fiscal deficits, especially in the US, will not decline, but actually more likely increase further. And therefore, with fiscal and monetary policies being very expansionary, I think it will come at the cost of a lower US dollar. Now, can the US dollar rally for 3 months? Yes, it can. But in the longer run, it will go down. And then the question arises, go down against what? Probably it will not tumble against the euro, because the Europeans are also very good at printing money, and they have their own sets of problems. But I think it will tumble against precious metals that are like money, but where the quantity cannot be increased substantially.
Right. So
moreover, I believe that equities compared to cash that gives you no return are relatively attractive, especially in Asia.
Okay, so I'm sorry, I wasn't going to interrupt there. What I was going to say is that you're saying this, you're describing this environment where the dollar is weakening significantly, right? And some of our viewers have written in either by email or on our comment board, and they say, oh, well, I'm just as worried as Mark is about things. I better keep some money in cash. And I've seen you comment recently, boy, that's the worst place you should keep your money, is cash. But tell people why.
Well, I think that the policy of the US, of the Federal Reserve, by keeping interest rates at zero, and after 2001 they slashed it down to 1%, and they kept it at 1% until 2004, that basically reduces the purchasing power of money. And one of the functions of money is to be a store of value, but the Federal Reserve totally ignores that. I mean, the Federal Reserve ignores a lot of things that are very important, like credit growth. They totally neglected credit growth. How can you have a country where credit growth, like the US, was running at 18% per annum, and the Fed just sleeps over it? Now, I believe that cash is not a desirable investment, because the policy is to make cash worthless. And if you read the statements by the Fed and also leading economies in the US, that will happen. But there are maybe other cash like gold, silver, platinum, palladium that are more desirable.
And so, you know, you also made the point, though, that central banks around the world, it's not just the Fed. I mean, there's a lot of folks printing money all over the place. And you've talked about Asia, the opportunities in Asia. When we talk about the BRIC countries, when we talk about Brazil, Russia, India, and China, do we need to add some acronyms in there? Where in Asia specifically do investors need to look if that's where they should be right now?
Well, a lot of markets have doubled actually from the lows. But say in Singapore, Malaysia, Thailand, Indonesia, I still find companies that are good value. And in particular, I find companies that have a dividend yield that is twice the bond yield, the local bond yield. So at least you're paid to wait. I'm not saying that all the markets will go straight up, but I think there is a risk over the next 10 years to hold cash, and that cash will be an undesirable investment, as well as U.S. government bonds, I may suggest. Because if you have a Federal Reserve run by a money printer like Mr. Bernanke, then obviously bonds and cash are undesirable asset classes.
Now, let me ask you, you talk about the Fed chairman being a money printer. Nobody's going to doubt you there because the facts are what they are. What about what's next, however? Because the chairman, I'm sure, would tell you, well, hey, listen, I have the tools to fight this on the other side, just as I have on the way down, and I'm going to start to unwind these policies at some point and begin, for example, raising interest rates and, you know, taking away some of these accommodative policies. You're chuckling because you don't think he can do it, do you?
Yes, I think you're a great optimist because if you look at the pattern of the Fed over the last 20 years under Mr. Greenspan and Mr. Bernanke, they never took the punch bowl away.
Right.
On the contrary, they fueled one asset bubble after another, and we now know what the result is, a total disaster. And Mr. Bernanke, with his ill-conceived economic series, he will bring the whole world down eventually.
Oh my goodness, that's the worst thing I've heard all day.
So then
what's the next
right
bubble that's going to... Okay, go ahead.
We have already a big bubble, and that's in government debt. That will increase dramatically over the next 5 years. And as far as the eye can see, I cannot see how the U.S. will ever balance its budget and how they will retreat from a $2 trillion deficit.
Okay, one last thing then before. So let me press you on that point just real quick here. So that's the next bubble is government debt, and it's blowing up now. What happens when it bursts? What's it going to look like? Lower living standards? I mean, how does that actually look and play itself out once that bubble bursts compared to the other ones?
Yes, you're touching on a very important point, the standards of living. If you look at the last 10 years, we had an economic expansion November 2001 to November 2007. But for the average family in America, for the middle class, the standards of living didn't go up. And today, we have less employed people in the U.S. than 10 years ago when the population increased in the meantime by 30 million. So there hasn't been any wealth creation at all. This is a wasted decade. And this was engineered by the Federal Reserve, and they're responsible for it. But they don't want to acknowledge their mistake, because if you read all the statements by the Fed, it never comes up that it was excessive leverage and excessive debt growth that caused the crisis.
Well, with all due respect, I know a lot of people who don't admit their mistakes as well, besides the Federal Reserve when it comes to the economy. We only have about 30 seconds here before we're going to just go for a quick break. But there's some people that say, not just Connell as an optimist, that say we're actually in a bull market. And Bob Dahl's going to join us in just a moment. He says we're in a bull market, a cyclical bull market right now. So in 30 seconds or so, Mr. Faber, what would you say to Mr. Dahl?
I agree that stocks can go up. In fact, my view is the worse the global economy, the worse the U.S. economy, the more stocks will go up because the more money they will print. That is my view. But it doesn't go up necessarily because of healthy economic fundamentals. In hyperinflation times, stocks go up and the economy worsens.
There you have it. Mark, hang with us for just 1 minute. We're going to fit in a quick break. As Jenna said, Bob Dahl's coming up, and still have Bill Fleckenstein. This is a great conversation about the world and the investing world. And